Hi, welcome to this video today. In today's video, it's October the 30th. We're going to be looking at a minor currency pair that's got a huge influence on financial markets. Now, in terms of the pair we're going to be looking at, it's risen every month this year. It's been a smooth, strong rise. There's probably more upside to come. Now, if more upside does come, it's going to weigh on some of the major currencies against the USD. Now, in terms of the pair that I want to look at, it's USD CNH, so dollar against offshore spot Chinese yuan, and also currencies that are influenced by yuan weakness. So, for those with a big trading relationship with China. So, I'm also going to be looking at the USD against the AUD, the NZD, the ZAR, and the SGD. Now, in terms of one thing we always like to look out for in the markets is an event risk that most people are not prepared for. The last time we got a big event risk trade was the Russian invasion of Ukraine. We were positioned for that. We thought they'd invade, and yeah, it was great volatility in our favour. Now, in terms of China, there's something very significant, in my view, that is going to happen, which is going to send the USD up on the yuan and send all the yuan correlated currencies down. It could actually also spill over into the broader financial markets and create a lot of volatility. Now, in terms of looking at the trade setups and the logic behind our views, we're going to do that right now. But just before we do so, if you want to learn all our currency trading techniques, learn our strategy, check out our daily technical sentiment analysis of 14 FX pairs. You can get live access to our member center on the link beneath this video. Now, live access will shortly end, and we're going to an annual subscription, so you can lock in live access if you wish, and there is a discount on membership for a limited period as well. Also, beneath the video, you can check out our free daily blog research, join our Facebook group of traders, and follow our Facebook page if you wish. Right, let's go and take a look at the trade setups. Right, we're on USD CNH, the monthly chart, and you can see it is a nice strong rise. Just been rising all year, not a down month. That's about a 16% rise. It's been quite a smooth trend as well. We'll look at it when we get to the daily chart in a moment. Now, in terms of the yuan, the USD is obviously pushing up. I think it's going way higher, and we could see a devaluation of the yuan, which could see the US trade as high as 10. I don't expect a devaluation next week, but in the coming months, the odds of a devaluation are high. If you get one, that will send turmoil through financial markets, okay? But even if they don't devalue, People's Bank of China can let the USD rise on the yuan. I just want to summarize the reasons why the USD has got further to rise longer term. I just want to go through some notes I've written here and show you some supporting charts. Now, in terms of this is from our weekly market update, but I've actually posted the bits on China on the blog, which is the link beneath this video. Now, we know Xi Jinping, he's got an unprecedented third 5-year term. He's just basically now like Mao Zedong. He's got absolute power. Now, we did see after the Congress had finished that China grew by 3.9% in terms of GDP. That's better than the 3.3 expected. And look how much better it is than what growth there was in the previous quarter. Just 0.4%. Is the data real? Of course it's not real. Just after the Congress is finished, obviously Xi has got absolute power. They can't produce bad numbers. The numbers are probably closer to 0.4, the GDP, or maybe even lower. And the reason GDP is low is because of the zero tolerance to COVID, okay? And there's other problems in the Chinese economy, which I'm going to come to in a moment. Now, in terms of China, Xi has surrounded himself with hardcore leaders, or hardcore Politburo, should I say. Xi has noted that basically relations between the US and China are not good and could deteriorate further, which basically sets up confrontation in the Indo-Pacific. Security is paramount. There's a crackdown in terms of the economy internally, which will see foreign companies and foreign investment leave China. You've got really strong nationalism. You very often get that historically when you've got an economy in big trouble, and China's economy is in big trouble. We can see here leading indicators: industry, construction, services, GDP coming down. Okay, this is independent data. They should all be below zero soon. Okay, and we're going to see a really big slow up in China, which could become a recession. China consumer confidence absolutely plunged. Obviously, consumer confidence has two main reasons why it's plunged. One is the zero tolerance in terms of COVID. Look at this: cities with high mid-risk districts increased to around 47% of national GDP. The zero tolerance, they said they're going to continue with it. Okay, it's going to really smash economic growth. And if you look at the vaccination rates, they're not very good, are they? Or very big, I should say. They do have two vaccines, Sinovac and Sinopharm. They were developed quickly. They're very, very ineffective compared to Western vaccines. So the COVID problem will continue in China. Now, in terms of looking at Chinese economic growth, this chart here relates to Australia because its biggest export is iron ore. This huge fall is because the housing market is collapsing. The housing market is not just important to China, it's important to the world. This will continue to go down iron ore. That will weigh on the Aussie dollar. But now let's look at Chinese real estate. 70% of household wealth is stored in property. The market is worth 60 trillion. That's 30% of China's GDP. It's just basically a speculative bubble. And you can see here, basically the property market turning south. Okay. Now, in terms of the Chinese property sector, T.S. Lombard do a good summary of how bad it is. You can read that in the article. And just to show you how important it is in terms of valuation, look at Chinese housing over here. Okay, it's massive against US housing or Japan. If the Chinese housing bubble unravels, it's going to cause havoc in the economy. Okay, and China might just decide to devalue the yuan. Why would you devalue the yuan? Well, the logic could be that, okay, you're struggling internally. If you devalue the yuan, your exports become more competitive. Okay, so I think that could well happen. So it's pretty gloomy in China at the moment. So I think the USD is going to continue up on the CNH, and the correlated currencies are going to be going down on the USD as well. So let's go take a look at the trade setups. I'll start first of all with the daily chart of USD CNH. Right, USD CNH daily chart for anyone new to our videos. When we do our technicals, pretty simple, just big levels of support and resistance. We use volatility in our analysis, and also use momentum as backup. Okay, now we've already got a bias from the fundamentals and sentiment, and obviously our bias is the USD is going up. Now, if you look how this trend unfolds, you get the big blue here I'm highlighting on August the 15th. Then look at how it dips the 20-day moving average fine support, just briefly through here, then a bounce, briefly through here, then a bounce. I think, if we open above this first support level, I think USD is a buy for fresh positions. If you go through the first level, you could key off the 720 level. We have an open target on this one. We've already hit new multi-year highs, so we don't know how far we're going to go. Okay, but big fundamental sentiment point to far higher prices. There is the chance of a devaluation. Now, there's one thing I will say. Next week, we do have a high impact event, which is the Fed. And, the dollar corrected in a number of pairs. You can see it here. Because the market is looking for the Fed to do a dovish pivot. We don't think that's going to happen. Okay, so we think the dip is a buying opportunity. We've already come back to the upside. So looking for more strength in the yuan and weakness in the correlated currencies. And I'm going to AUD USD. Now, in terms of AUD USD, that was a great downtrend for us. Got a good portion of it got stopped out as we bounced back up above the 63 level. Did run on a bit to the upside. Now we've met resistance here at 65. You can see two bodies forming a double top. Can we take out 65? I would look for a break below 64. Okay, for coming in fresh. Mid-Bollinger Band or 20-day moving average will creep up. So if we go through 64, 63.80, that'll take out the round number and then the mid-Bollinger. Then we should be off to 60, then 55. They're monthly support levels. You can go and check them for yourselves. But 400 to 900 pips more on the downside, of course, if our view turns out to be correct. Of course, it might not. But we think the odds favour more Aussie weakness. You could look for a rally up to the 65 level and look to sell weakness as well. But Aussie, plenty of downside potential. Where should we go next? All right, NZD USD, similar look to AUD USD. They're correlated together. Again, we've got a really nice run down there. Then we got stopped out. Then we did try another short trade. I was too tight to stop, and I got stopped out in this blue that came up here. But in terms of the last couple of days of the trading week that's just gone by, tried to get to 59, couldn't. Low volatility. The way I play this one, you can see it at the top of the screen. Go 157.80. So through the low and through the round number. Stop 59.40 behind first level resistance. We're looking for a move down to 50, which is monthly support. So hopefully plenty of downside. If we rally though, you can see I'm going to hit it at 59 on the round number, okay, and then use a stop back behind the 60 level. I just view this as a bear market bounce, and I think it will end. Now, in terms of both AUD and NZD, they're correlated. Which is the best? I'm doing both, but I'm doing a slightly bigger allocation to the Aussie. Okay. Now, in terms of the next pair, USD ZAR, fast-moving, volatile pair. This is a really big move up. What's about 14%, something like that? Then you get all this choppy price action. And we go through the 20-day moving average. This is where the USD has its correction, obviously. Make a double bottom. Come back through the 18 level here, okay, which I think should provide support. Just through the 20-day moving average. If we can get through the high, then I think we'll be off the upside. On this one, I've got targets of 19, which is here, then 20, which is off the top of my computer screen on the monthly chart. South Africa heavily exposed to China in terms of trade. It's got a lot of problems in the domestic economy at the moment as well. Just a small position. It's a fast-moving pair, but I think the risk-reward is good. Last pair, USD SGD. Now, in terms of this pair, I think it was in the last weekly forecast, I picked it out as my favourite trade of the week, and I promptly got stopped out, okay? But this correction now has come into major support. You can see it here, and obviously got another level behind, okay? We have come in at 141.30. We're just at 141.05 close. I'd wait for a move back through this candle high if you're coming in fresh, and then see if we can go to the upside. Stop should be back behind the 140 level. But we're looking for 145, then monthly resistance at 150. So the risk reward, yeah, pretty good. I think the correction, sure, it ran on further than I expected, but I think the risk reward on this one is pretty good. In terms of Singapore, is a major hub for Asia, a lot of Chinese trade. So Yeah, I think it should be going down. Obviously, next week, like I said, we do have FOMC, so you could see plenty of volatility around that. But I think, in terms of going forward, I think the one, it is going down, and so are these correlated currencies we've just looked at. So that's the video for today. Just trying to think if there's anything else I can add. No, that's it. I hope you found the video useful. Thank you for watching. Take care. Have a good day.